Okay, let's get into the stock market technical analysis. We'll go ahead and look at the broad markets. I'm going to keep this video just to the broad markets. All right. So if you guys are finding value, please drop me a thumbs up. If you're interested in the private member group, we got this short trade pretty much locked in the private member group, and I've been talking about it on the public channel, but definitely had that locked in. Feel free to join up. $5 a month. Link in the description below. Check it out. All right. So triple Qs. Obviously sold down. We wiped out 4 months of gains in about a week and a half. And I think we're going to bounce now. I think we're sitting here at the election gap. All right. This is the post-election gap right there and the 200 days. I think we're going to get a bounce. It makes sense. On the daily chart, that's good support. When I go down to the hourly in the tech sector, the hourly chart, you've got bullish divergence. All right, you can see here on the momentum, there's your bullish momentum moving up, and we've made a series of divergent lows. There's one, there's two. I think we're going to rally, and the targets, I've got a couple targets, but on the way up, 500, that was obviously a reaction. So that would be your first level of level of resistance. We break through that, we should probably get up to about 510.50ish, somewhere right in there. And you break above that, I'd say 519. Kind of the final rally point there, from my perspective, would be about 519. And then from there, I do believe that would be, if you did get all the way up there, that's an objective area to short. It's not objective to short right where we're at now. All right, they call that shorting into the hole. Doesn't make sense to do that. The short actually, if you have been following the channel, we had that former reaction high right there. We briefly broke above it and made a new divergent high. And so that was an area where I was like, okay, maybe stop out of these shorts because it could continue to run because you don't know. But once it failed back below that former reaction high, I got back short. And I told everybody that's what I was doing. And sure enough, we shorted right back in there and boom, caught that entire move down. So on this channel, I've anticipated this drop, and we've caught the, from that drop there, it was about a 8.5% downside. So 4 months of grinding around, chopping up, and we got that all, we made all that money in a week and a half. Okay, so rally, that's where I'm going at. I am positioned that way right now. I've covered my shorts, taken my profit, booked it, and now we're looking for some relief rally price action. Okay, what if we don't rally? Because obviously we don't have to. If we don't rally, then we've got reaction lows right here. We could drop down to the 483.30-ish area. Maybe then we see a rally. And if we don't really hold that, I'm going to have to look at lower levels. There's obviously lower levels, and I do think we're heading down there. I just don't think we're going to get down there in one drop. I think we're going to rally along the way. If I go to the daily chart, we've got some kind of a longer term trend line to watch all the way down here in triple Qs. And that level right now, that target would be down around 413-ish, somewhere right in there. So, yeah, there's definitely lower levels that I believe we'll hit, but I think we would probably rally at 483 if we don't rally right now. Leaning towards rallying right now. S&P 500 also hitting support. There's your election gap. You had a reaction there. You can see we sliced through that level, but we've recovered it now pretty much. So again, it looks like it should hold this support and we should get some sort of a reactionary bounce. All right, that's the way I'm leaning. The 200 days just below, so they might make it look like it's going to hold and then tomorrow gap it down to the 200 and then you rally. But in general, I think we're in the area where it's just not objective to basically be short unless we start taking out support levels. I think that's kind of where we're at. Small caps, I don't cover those a lot. They're pretty much the regional banks, a lot of bank stocks, sitting at some support right there at 203. So again, a bounce probably to backtest the 200 days. would make a lot of sense, or there's this downtrend line potential. So that's kind of what I've got. And then the KRE, which is your regional banks, hitting support as well. You can see right there, support at about 57.80, and you have the 200 days. So a lot of support, in these regional banks, and you should see that start to get reflected in the small caps. And I see, I just see it across the board in a lot of different sectors. Here's another reason why I think we rally. Here's your 10-year Treasury yield interest rates hitting support right now. All right, we've got some reactions there, and I can actually extend this out. There's some more reactions from the past. So we are at support on the interest rates, which means rates will likely rise, and you can see they're starting to right here, which means a bounce in interest rates. And now normally that would be bearish for the markets, but what we've seen recently over the last week and a half, 2 weeks, is a flight to safety. We've seen a risk off trade where stocks risky stocks like tech and stuff have been sold, and the money's been moving into defensive stocks and bonds. So if so a counter trend or counter trade of that, if money kind of comes out of bonds, then it's likely going to go back into some of those risk tech stocks and stuff. So that's kind of what I'm seeing is rates bottoming and maybe starting to rally a little bit, and some money coming out of bonds and going back into the tech stocks. Here's XLP, which is your risk off sector, your consumer staples. No real indication now that they are gonna sell off on the daily chart, but if we drop down to the hourly, you can see we do have some negative divergence there. Right there is, divergent high on the hourly. So again, I think you're going to see a little bit of an unwinding of this. You'll see kind of a little bit of a risk on trade coming back, and it makes sense. The tech stocks have really been beaten up, so to see a little bit of a move against that makes sense. So something like LLY, which is in the healthcare sector, that's been part of this risk off trade where they've been buying these safe haven stocks. Looks like a short to me. On the daily chart, I don't see any negative divergence, but if I go down to the hourly, you can see we clearly have negative divergence now on the hourly, on the RSI and the PPO, and we have an uptrend line to watch. All right, support, starting to break now. All right, we actually do have a break of that trend line. So, it's not a screaming short, but it does look like a potential for a short there. I'd be looking for a little more selling, and then kind of impulsive selling, and then that could be a short. If I look at the daily, probably back down to the breakout point, down to this 200 day, around 845.75. All right, that'd probably be where I'd look for to take profit on that. That would be a drop from where we're at right now of about 7%. So there's a trade idea. It's not completely actionable yet. I need to see a little more downside, but definitely has a good setup. And, I just see signs that it's risk. A little bit of risk on is going to come back into the market. All right, that's all I've got for today's video. Just keep it short and quick. I'll get the video out and catch you guys on the next one.